What's up everybody, Tom here with another video. In today's video, we'll be discussing everything to do with the stock markets right now around the world. We'll also be taking a look at our technical analysis levels for the S&P 500, NASDAQ, Bitcoin, dollar index, gold, Tesla, GME and more to try to find out what exactly is going on with each of these positions. It was all about hypergrowth yesterday because it's back, and for now, it's pump it up. Stay tuned. So guys, as you know, I like to always take a look at the heat map here to try to find out what's going on in the markets right now. And yesterday was clearly all about tech. We saw PayPal doing very well, Nvidia doing well, Tesla also recovering somewhat. And it was really the smaller tech hypergrowth stocks that performed the best. When we have a look at the indices, you'll see how that really played out. Russell 2000, the smaller 2000 companies, 2.2% up. NASDAQ 2.36% up, SPX up 1% due to the NASDAQ pretty much, and then we had Dow Jones. So it wasn't about banks, it wasn't about energy, it was really just all technology and communications at this stage. You can see these were the two strong sectors, followed by stimulus check money going into the consumer discretionary. Speaking of stimulus checks, it looks like the $1,400 stimulus checks are going out, and they're going to arrive as early as this weekend. Now, if they arrive this weekend, what does that mean for certain stocks out there? Are they going to perform well? Hypergrowth could be the beneficiary of a whole bunch of these checks, and other stocks like GME and AMC could also be. I'm a bit worried about GME and AMC, and I'll talk to you guys about that throughout the video, but specifically hypergrowth stocks, they're the type of places that these stimulus checks go. Wherever really heavy retail support is, that's where I see those ones ending up. So let's get started with the technical analysis, and what better place than the volatility index. The volatility index has continued to decline as the market rises up. It's now sitting at 21.9. This is perfectly normal. Will the VIX come back down to 20? Remember, as long as the VIX is above 20, you generally are seeing a huge amount of volatility possible in the market at any time. Only when the VIX gets underneath and closed underneath 20 will it become a normalized market. Certainly not a normalized market right now, with huge 3 to 4% moves very possible just based on the 20 volatility. It's not normal times during this crisis period. Dollar index also slid. It went through our resistance, becoming support area. You can tell this was a clear area, and the reason why is take a look at this 4-hour. We had some bullish momentum early in the session, followed by big bearish bust going back through the level. And this just shows you don't want to catch the falling knife at okay resistance support zones. Is this a zone I would draw again, 9160? Yes. Is it an area where I would just buy blindly? No. From a technical analysis standpoint, I usually like to dial into the smaller time frames, and I like to look for things like what we call the lightning bolt, double bottoms, pattern structure, candles, let's say pins or engulfing candles. You need a little bit of further confirmation on a one-touch resistance support role reversal. So for now, dollar index has fallen through. That doesn't mean it's over. It's just in the middle of a very difficult to analyze zone. And we'll continue to watch this for the weekly close, because the weekly close is coming up on the Friday session. What will that do? Now, if it closes around here, I'm actually not bearish or bullish on dollar index. It's right where I expected it to go. If it closes up here again, then it's looking a lot more bullish. So it just depends on what happens in the Friday session. A lot going on with the dollar index right now. Bitcoin, major beneficiary potentially of things like those stimulus checks, though Bitcoin's market size is so large now, it's unlikely to have that much impact. It's pushing the previous highs. So we have here a 4-hour 20 exponential moving average, which is something that I'm going to use to track Bitcoin through this next bull phase push. If we close above the previous resistance, where do we go? 60,000 seems very likely, with some selling probably coming in just as it reaches that level. Take a look at the left-hand side here. And I always say learn from the left so that you can understand the right better. 20 moving average was a beautiful buy zone along that last bull run. So this is on the 4-hour, and it just shows that if you understand that, it means that this is a key technical that we should be using as traders and investors to follow the moves. It's just so good to understand what happened on the left so that we can use it on the right. Gold looking okay as well, bouncing off the previous resistances here at the 1720. We knew 1720 was a strong resistance level. It then broke through with that flag, moved up to 1740. Previous resistance over here acted as resistance. And if this continues to move through, let's say we get above 1740, where do we go to? It's clearly going to be 1760. Every $20 here for gold is an important zone, but 1760 is the toughest area gold will face in what looks like a slight recovery for now. At 1760, you'll be hitting previous resistance, previous support, and over on the left-hand side, also a lot of support. Continue to watch this space for gold. It's an interesting role reversal level at the 1720, and I could see it moving up and trying to tack the 1740 throughout the next session. Let's see what happens, and we'll be doing that live tonight, or live today, for the Friday Stock Market Open. Join us, subscribe, like, if that's something that does interest you. Silver hit the 20 and the 50 exponential moving average, and guys, look at this, just a beautiful technical day trading zone. 2 moving averages and our previous trend line supports acting as resistance. A little bit of selling has occurred. If you're looking at selling silver, you would want further follow through, and what I mean by that is a low below this point. So you would really have to have the market moving underneath the last daily candle. This candle isn't showing us bearish or really bullish intentions, but if it now breaks through above this, closes above the trend line, where do we go? 2780. So it's really crunch time for silver and gold. Gold could go towards the 1760. This one here, 2610, breaks through the trend line, 2780, breaks underneath here, back to the 25s. So it's crunch. It's a critical zone for silver, and we'll continue to watch this space throughout the trading sessions. GME and AMC, what's going on here? Well, GME actually had an okay day. It ended up only down 1.89%. We're trapped within a zone. 275 is the clear resistance problem. We mentioned this in the stream yesterday. It did try to move up throughout the sessions, and then 240 is the clear support problem. So GME trapped. The longer it stays trapped, if it does break out to the upside, the good news is that could bring on the 350 again. If it breaks to the downside, the bad news is you're going back down to 200. And I'm worried for this position right now. And my explanation really is it just needs to continue holding bullish movements. Yesterday's close was very, very good. It shows that diamond hands are really in play. If you have a close after so much fear came in through the Wall Street algorithm play the day before, what's that showing? People again getting sentiment and getting confidence coming into these stimulus checks. Will Monday potentially be an explosive point if people are getting checks and piling it in? It certainly could be. So I'll continue to watch GME on the channel. 15 minutes is probably the time frame I'm looking at this and looking at the trades and looking at the opportunities. And we've got the zones all set up. AMC 1023, what's going on here? It's harder to read. I'd probably just go over to the right-hand side, follow GME, and when you look at GME, whatever happens there will be mimicked a little bit by AMC. $12 remains the longer-term resistance. If it gets through there, it could be incredibly explosive up to the 16, and we'll talk about these during the live session. So good luck to the crowd in the AMC GME community. However, at this stage, it's trapped, but the daily close at least was bullish. We don't want to see more volatility like we had on the Wednesday. That is too insane. And if that continues, it will lead to the end of the position. Speaking of the end of the position, it's already moving in terms of marijuana stocks. Tilray was up about 17%. That was the one that was a key beneficiary of the GME AMC finishing up. All of marijuana started moving. I'm not sure if it's going to continue. It's hit the resistance already at 28, but we've talked about that a lot in the live stream as well. 699 here for Tesla. What's going on next? Well, it's just a good daily close. Have a look here. Daily closed at right the same point that it pretty much opened. That means that even the selling that came through during the day was met by buying pressure. This is a strong bullish sign here for Tesla. Now, is Tesla stuck on a daily 20 exponential moving average? Yes. Has that daily 20 been okay in the past? Or you would argue it's been an okay buy zone, so therefore it could be an okay sell zone. But I like a lot that yesterday's sentiment was able to hold up. Now, because of where the NASDAQ is, the NASDAQ closed a little bit higher. We'll be taking a look at that soon. It really can push more towards the 750 level and possibly the 800 level. So we'll be watching Tesla closely, but signs are saying that the bullish recovery is back here for Tesla, and that any bearish points, like let's say back to the 660, should be met by demand and pressure coming through. Remember that 660 is going to be a heavy demand zone if it is reached during the market position on the Friday session or even the Monday session. We'll take a look at QQQ now, QQQ. Where is that going? I think yesterday it cemented that it was bullish. Let's take away this, see the bullish close here, straight through the positions. We mentioned the double bottom. Where does it go to? 324 for the QQQ. This is a clear level of resistance that I expect to pull back from, but it's basically slingshotting into that position. Now with the S&P 500 making pretty much new highs, that will also help lift the sentiment, and we're through the 3930 on the S&P. So all things are pointing towards, let's go towards the 324 on the QQQ, or on the NASDAQ, that's going to be 13,300 zone. So we'll bring this up here. You'll see straight away, there's the resistance. Here we are in the middle of nowhere zone. Any pullback back down to here should be met by buyer demand. And now we're trying to go towards that 13,300, and then we'll get more direction. If we clear above 13,300, then back to the highs. So it's an exciting time to be in the hypergrowth stocks and the tech stocks. Many people got brutalized by it. It just shows what can happen. People that are trading for the first time, 40 and 50% of these stocks is not unusual. In fact, some of them can go down sometimes to 80% declines before turning around. So always be very careful with your leverage in these positions. It can get dangerous out there. SPX, the trend line is now back in play. Will we see pump it up kind of music all the way up to here? You remember that pump it up song? That's what could be happening here on the stock markets. This is the zone 4,050 if it just went in a vertical line. The trend line has been just way too good to ignore. So if you're new to the channel and you haven't seen this one before, this is the trend line that we use, guys. It's just so good at predicting the resistance areas for the SPX or the S&P 500. It broke through, it closed above the 3930. That's a strong sign in itself. We did have a higher point where it actually basically made a new high, or very close to 3960, the previous kind of peaks, and then it sold off a little bit into the close. But I'm not concerned about that sell-off into the close because it did hold above 3930. In next session, I expect 3930 to be a point of support for this, and maybe it hovers at this area for a little bit as some stocks rotate out, maybe banks rotate out, and we get more movement into the tech sector as the NASDAQ reprices to those zones we mentioned. And then if we do see a breakout above this point here in this last high, 4,000 surely is the next target, with 4,050 plus on the books. It's very bullish in the stock market right now. The question is, how long can it maintain for? Or do we see a damaging amount of calls that are open? Is this some kind of stimulus trap where Wall Street will allow all of the checks to come in, people to buy calls, YOLOing, I guess is what they call it now, and then they sell it down? What do you guys think? Let me know in the comments down below if you think this is going to be a mega bull trap because Wall Street's trying to get all that stimulus money, or whether we're on to the next movement for April to be a great month and move towards the 4,050, 4,100 on the SPX. That's it for today, guys. Remember to subscribe and, of course, hit the like button if you've been enjoying our videos. I'm really pumped for all the Friday session. Join us there. It's going to be a lot of fun. That's it. Catch you for now. Bye.